Welcome back, everyone. In today's episode of Portfolio Analysis, we're going to count down the 10 most risky ETF portfolios. After pulling all the data and analyzing the results, I was actually quite surprised. There does seem to be a common theme among these portfolios. Before we get into today's video, I just want to let you know that the data that we're using covers the previous 10 years. When it comes to investments, 10 years is nothing. The portfolios involved in this study are all professionally accredited portfolios composed of ETF positions. None of these portfolios include individual stocks, and no self-respecting financial professional would ever recommend purchasing individual stocks. I closely monitor about 90 different portfolios, and the ones featured today are the 10 portfolios with the highest level of risk. If you're a regular viewer, then you already know that we measure portfolio risk using a metric called standard deviation. We've covered this metric a lot over the last year, so I won't go too deep into it now, but for those that are new to the channel, you need to understand this idea that when it comes to investments, we measure risk by standard deviation. Standard deviation measures volatility. In other words, how much a portfolio's returns go up or down over time. If a portfolio's standard deviation is high, then we consider our returns to be volatile. The portfolio may be producing huge returns or losses now, but could easily swing in the other direction at any point. So if a portfolio produced, let's say, a 12% return with an 8% standard deviation, then that means that this portfolio could be expected to return anywhere from 4% to 20% in any given year moving forward. Your goal should always be to get the highest return with the lowest standard deviation. Now, just because a portfolio's standard deviation is high doesn't mean that it's a bad portfolio by any means. It just means that the potential for large losses is fairly high. The 10th most risky ETF portfolio on our list is the Warren Buffett Family Trust. If you're interested in the history of this portfolio, and it is very interesting, I made a standalone video on that, so feel free to check it out. Long story short, Buffett instructed his trust custodian to invest all the money that he intends on passing to his heirs into two positions: the Vanguard US Large Cap ETF, ticker symbol VV, and a short-term US Treasury bond fund. From 2011 through 2021, this portfolio returned a very respectable 14% annualized, but that return did come with a 12% standard deviation. Its largest drawdown was a negative 18% from February 2020 through March of 2020. Next up, we have the second greatest portfolio. This portfolio was created by financial writer Paul Farrell. It looks a lot like a Boglehead portfolio, split across US stocks, international stocks, and bonds. And this one is recommended for people who have inherited a large sum of money and don't know how to invest it properly. This portfolio returned 11% annualized with a 13% standard deviation. Its largest drawdown was about 20%. The 8th most volatile portfolio on the list is Vanguard's Total US Stock Market Index. This comes in the form of an ETF, ticker symbol VTI, or a mutual fund, VTSAX or VTSAX. This fund is famous for its ridiculously cheap expense ratio and fees, and it's the de facto way to invest in the United States stock market. This portfolio produced a fantastic 15% annualized return, but did so at a 14% standard deviation. Its largest drawdown was 21% during the 2020 pandemic. It also produced positive results 87 of the months and had 33 months in the negative during these 10 years, which is a very good ratio. Unsurprisingly, just below the total US stock market index, we've got the Vanguard Total World Index, just slightly more risky. This is a total world index, so it contains a broad range of assets from across the world, including a large portion of FTSE securities. It produced a 11% annualized return for a 14% deviation. Its largest drawdown was 22%. Coming in at the number 6 spot, we have the Paul Merriman Ultimate Buy and Hold strategy. Merriman is a highly respected advisor who used to work for DFA, and he's one of those people who you should follow if you care about portfolio management. We've talked a lot about this portfolio on the channel, so I'm not going to rehash all that now, but this is a smart beta portfolio that tries to maximize returns by spreading the risk across uncorrelated sectors and asset classes. Ultimate Buy and Hold has returned just under 10% annualized with a 15% deviation. Its largest loss was a negative 28% drawdown.
In 1975, a man took a stand to help more people become successful investors. So he started a company, recognized for fairness and good value. Today, we are 30 million investors around the world. Join us. Vanguard. Value to investors.
Coming in at number 5, we have the Developed World portfolio, and this is a FTSE index that tracks large caps in non-US developed markets like Canada, Europe, and the Pacific. If you need exposure outside the US, then this is a fund you definitely would probably want to consider adding to your portfolio. This one returned just under 7% annualized for a 15% deviation. Its highest drawdown was 24% from February 2018 through March of 2020. Most of these portfolios experienced their largest drawdown during the 2020 pandemic, but this one spent over 2 years drawing down. Coming in at the number 4 spot, we have a portfolio that I'm sure all of you own. Ticker symbol QQQ, also known as the NASDAQ 100 Index. Now, I began my investing career in the 1990s, and I owned stocks like Cisco Systems and Nortel Networks and Enron, and I also owned a NASDAQ index at the time, which lost something like 90% of its value. In the case of Nortel and Enron, I lost 100% of my investments there. Given my experience, I've had a hard time shaking my negative bias for QQQ. But as far as the last 10 years are concerned, QQQ has been an absolute beast, returning a mind-boggling 21% annualized for a 16% standard deviation. If you were lucky enough to start investing in QQQ in 2011 or 2012, then you're probably retired now and you're enjoying a life of financial luxury today. Coming in at number 3, we've got the gold portfolio, ticker symbol GLD. Gold has been a huge letdown over the last decade, returning a pitiful 0.71% annualized. Its largest drawdown during the last decade lasted for over 4 years. Based on the data, we can project that over the next 10 years, gold is likely to return anywhere between negative 17% and positive 17%. The second most risky ETF portfolio in our study is the Vanguard FTSE Europe Fund, ticker symbol VGK. This fund tracks the all-cap index across the European continent. This one produced just under 7% annualized for a 17% standard deviation. Its largest drawdown occurred during the 2020 pandemic, which was a 26% decline. So, what was the riskiest ETF portfolio from 2011 through 2021? Please remember, if you enjoyed this video or any of my research on YouTube or the website, please let me know by subscribing, liking the video, and writing a comment. This fund holds securities from over 800 markets, and it focuses on large and mid-cap stocks. However, 35% of this fund is composed of Chinese stocks, and given the recent hostility towards business owners from the Chinese government, I personally am no longer recommending that people invest in this fund. But in any event, this portfolio produced a pathetic 3% annualized return for an over 18% standard deviation. Okay, so that's my list of the riskiest ETF portfolios over the last 10 years. It seems that there is a common theme among the data, particularly that international stocks have really been poor performers, given the amount of risk that you have to take to invest. Also, is it possible that crypto and Bitcoin specifically have displaced gold? I just can't see young people investing in gold today, especially over crypto. So I think if any of these portfolios are at risk, gold potentially is at risk. So are you invested in any of these portfolios? What are your thoughts on this data? Let me know in the comments below. And as always, feel free to leave comments and suggestions for future videos. This channel recently reached 1,000 subscribers, and I'd like to personally thank everyone for the support and the feedback. It really does mean a lot to me. We'll see you guys in the next video.